Alright, yes guys, welcome back to another YouTube video. I hope everyone's doing well. In today's video, we're going to be breaking down two trades that we took last week with the live trading signals group that ended up being both W's. So we're literally going to be doing a full breakdown or a trade recap, whatever you guys want to call it. I've been getting a ton of DMs lately and requests pretty much saying that you guys want to see weekly updates. So at the end of every single week, we'll go over some of the trades that we took. We'll break them down. We'll see what we've done wrong. And obviously that way we can all learn together. But yeah, other than that, let's jump straight into the video. So let's go over the first trade that we took. Okay, this trade was actually on Wednesday. And the price action last week, I'm not going to lie to you guys, has been very boring and terrible. But anyways, we did get two opportunities during this week. So this was actually a unicorn model at the time. So if you don't really know what unicorn model is, go over to my channel and watch a few videos about it. I've got a ton of videos explaining the unicorn model. Okay, literally full A+ checklist criteria. Everything that you need to know is on my channel. So if you don't really know what that is, go ahead, watch a few videos and then come back to this one. But just to explain it in brief, okay, all it is a breaker block that's paired with a fair value gap, okay? Very important, they have to be overlapping each other in order for this trade to be high probability. In this case, you can see the breaker block and fair value gap are in the same kind of area. Hence, this was a trade that I was looking at and interested in. So the whole of the morning session, right, we were just chopping around, ranging. And inside of this, okay, if you actually zoom out and look at the chart, guys, you can see all it is range. We're not displacing higher outside that range, and we're not displacing lower outside that range. We're simply just chopping around, and this looks like a barcode to me, okay? So as soon as I seen this, I said, you know what, guys, I'm gonna sit out the first AM macro, and I'm simply going to wait for the second AM macro, and I want to see either one of these levels get swept. Okay, I want to see price break out of that range, sweep some liquidity, and then potentially we can get some sort of trade set up. Okay, so once we swept this buy side liquidity level here, okay, as you can see, buy stops, we swept it, we came up. At this point here, I was looking for a displacement lower in the opposing direction to take some shorts. Okay, so as you can see, we've got these two highs next to a buy side level. That is our breaker block. Okay, so once we get that high, we follow by a swing low, followed by another higher high, taking out this previous swing high and also tapping in to this buy side level here. So what this does, right, traders who are trading support and resistance, okay, price is coming up, they're looking at this buy side level as a resistance level and they're trying to short that resistance. Okay, so traders are going in short, the market will then come back up, stop those traders out, and then the real move will occur. Okay, so that's the whole reasoning behind the two highs next to a buy side level. So anyway, you get that swing high, you get that swing low, you get another higher high, taking out that high, tapping into that buy side level, then you get a displacement lower, breaking below that swing low. The lowest down close candle inside of that price leg is going to be your breaker block. So this down close candle here is our breaker, and then we have a tiny fair value gap just inside there. Now, notice how we didn't actually displace below this swing low. Okay, look at this candle here. Very indecisive, very wicky. There was no candle closure. We didn't displace. Okay, so one could say, okay, there was no market structure shift here, was there? There was no clear, valid displacement. However, you are incorrect. Okay, simply because when you're trading NQ, you have to look at the correlating asset, which is ES, S&P 500. Okay, so what I usually do, okay, is I have NQ on one screen, ES on the other. Now, if ES has a valid and clearer displacement, okay, breaking below a swing low such as this one, and NQ doesn't, I'm going to be taking that trade based off ES's price action. Okay, it's very important that you look at ES. Same exact thing if we have an SMT, right? Let's say NQ takes a high, ES doesn't. We have that bearish SMT. If you're not looking at ES, you wouldn't actually know that at the time of the trade and you'd miss this opportunity. Hence, it's so important to look at that correlating asset. So the way I actually use ES, and this is a huge gem, okay, huge value. Not a lot of people know this and they struggle, okay? So please pay attention to what I'm about to say here, okay? The only way I use ES is for SMTs. So for example, a TP level, okay? Let's say my take profit is down here at sell side. If ES comes down and takes that low before NQ does, and my take profit is there, I will close out my position on NQ simply because we have that bullish SMT and there's a chance that price can reverse. Okay, so I look at ES for TP levels and I also look at ES for valid market structure shifts and displacements. So if we get a valid displacement and market structure shift on the ES, but we don't on NQ, I will take that trade based off ES's price action on NQ. Now, a lot of people don't know that and they'll miss out a ton of trades. So that right there is a huge gem. You guys can do whatever you like with that, but I highly advise that if you're not already using ES when you're trading NQ, start doing so, okay? Because you'll get a lot more trades that play out in your favor when you use both of the assets. So anyway, I see that ES displaces below that low and we get a valid market structure shift, valid displacement, and a clear entry off the fair value gap. So as soon as I see that, I decide to enter off the fair value gap. Look how little drawdown we get on this trade, guys. We literally tap into it by one tick, and price is already going in our direction. So one tick of drawdown. This is why, this is why I love this exact model, okay? It's called the unicorn model for a reason, okay? Because it's just amazing, guys. It does not give you that much drawdown. Usually when price taps into these areas, breaker and a fair value gap, it's not there for long. It really isn't, okay? One tick and it's already gone. That's why I love this model. That's also why I teach this exact model inside of the live trading signals room. People love it. They come in, they watch me trade live, they learn, they take action, and they put this into play by themselves, and they're getting payouts, they're getting funded. Everything is going well. So I highly recommend, if you're not already using this model, start using it, okay? Because it's very, very powerful. So yeah, anyways, we decided to enter off that fair value gap there. Stop loss above the swing high, risking around 18 handles on that trade, okay? Usually the maximum risk that I like to risk on a trade is 30 handles maximum, okay? And I'm usually trading 4 mini contracts. So you can work out the risk on that. It's around $2,000, of course, spread across multiple funded accounts. So that $2,000 risk isn't really $2,000, okay? It's more like around $40,000. But again, you have to also understand, guys, I'm not trading all of my accounts at the same time every single day. Some days that I will trade all accounts at once, okay? If the trade setup is AA+, an example of an A+ setup is, let's say we've come down, we've swept London lows, we've tapped into a higher time frame PDRA, so which is a daily fair value gap. The higher time frame is bullish, the bias is bullish, okay? The lower time frame is aligning with the higher time frame. We get displacement higher. I get a valid unicorn model inside of a macro. And let's say, for example, equal highs at the top. I'm taking that trade and I'm risking all of my funded accounts, okay? Simply because that's an A+ up and there's literally nothing else that I'm looking for, okay? If there's one thing missing, then it'll be a B+ up and I won't trade all 20 accounts at once. Usually I'll risk around 10 accounts on a B+ up. A C+ up, I'll be risking around 5 accounts, and then an AA++ setup, I'll be risking all 20 accounts plus the one live funded account with top step. But yeah, anyways, we decided to enter off that fair value gap, stop loss above the swing high, and then we simply target the external draw on liquidity, which is sell side down here, okay? Now, once ES took this, because again, going back to the correlating asset, ES did take this at the time, I decided to close out my full position at this level for around 62.75 handles, okay, on the day. And if I actually skip this, you can see, for someone not looking at ES, they would have been in trouble here, right? As you can see, price reverses and it never hits TP. So that's why it's important, guys, to look at ES, because if you weren't looking at ES at the time, you'd have got absolutely wrecked, right? And you would have missed out on a profitable trade. So yeah, that is the importance of ES's price action. But yeah, that is one trade that we took this week. I'm also going to break down one more trade in just 1 second. But yeah, guys, please let me know in the comments. If you like these types of videos, I will make sure to drop them every single week. If you don't want to see weekly trade recaps, weekly trade breakdowns, things of that nature, drop a comment and I'll continue to put these videos out. But yeah, let's jump into the second example. All right, guys, so this second trade was actually very, very messy, all right? As you can see on my chart right now, it's definitely a trade that we can learn from and 100% a good trade to break down. So we're going to go over it anyway. But yeah, I did post on my Instagram. So for you lot that did see it, we literally were one tick from getting stopped out. And then somehow we hit TP, which is crazy. But yeah, let's break this trade down. So we had buy stops in the morning, right? We came up, we swept liquidity. Buy side got swept. At this point, I was just waiting for displacement lower. Again, price displaced lower. We broke below this swing low. So we had that valid market structure shift. We also inversed these bullish gaps here, and we broke below this low here as well. So once we had that valid displacement, I was looking for a entry on a fair value gap. This was just a simple silver bullet model. Now, a lot of people were asking me, Ben, why did you take that first fair value gap there? Why didn't you take the second one? Why didn't you take the third one, right? there's so many gaps there. Which one do you know to choose? Okay, so usually what I do in this scenario, okay, is I get my fib tool out. So I will measure from that swing high of the price leg to the swing low, okay? And whichever fair value gap is in a premium, okay, since we are shorting, we want to go short inside of a premium. Whichever fair value gap is inside of a premium or at equilibrium, I will choose that gap to go short from. So in this case, right, it would be the second one, okay? Why did I not enter off the second one? Simply because if I enter off the first one, I've got a valid stop loss and I'm risking 30 handles, which is inside of my risk management. So if I can get an entry on that first fair value gap and have a valid stop loss of 30 handles, then I'll take that trade, okay? Let's say, for example, this first fair value gap gave me a stop loss of 36 handles. Then, of course, I'm not going to be taking that first gap, and I'll use this method, okay, of measuring from swing high to swing low, finding 50% of the range, and I'll choose a fair value gap from there to go short from. And that way I'll have a valid, correct stop loss placement, okay? Since I'm risking 30 handles and this inside of my risk parameter, I'm taking that first gap, okay? Always enter from the first fair value gap if you have the ability to have a correct and valid stop loss placement, okay? Because there will be some cases where price will tap that gap and it's gone, okay? It's going straight to TP. Don't always wait for the perfect entry. As long as it gives you a correct stop loss placement, that is the model, okay? You should be entering off that first gap as soon as it taps in there. So yeah, anyways, we enter this trade, guys, and as you can see, crazy price action, okay? Price comes all the way up, okay? Nearly stops us out. One tick. I'm not even joking. One tick, okay? Edges us like 2-3 times, whatever, and then somehow reverses. Once price broke below this low, I just moved my stops to break even, and it was a risk-free trade, and then price ended up hitting TP. So again, as you can see, price never actually digged through that sell side level there. But again, going back to what I was saying a few minutes ago, ES's price action actually took that low out. So as soon as ES took that, I decided to close my position fully, and we secured around 43 handles on that trade. Again, guys, I'm not gonna lie to you, okay, last week's price action wasn't the best, but we still closed out in a profit. Pretty much a break-even week for us, but it wasn't that bad. There was a few opportunities. This is just a little scalp trade. But yeah, I mean, you have to take what the market gives you, guys. Some weeks the market will give you 300 handles in one trade, and some weeks you'll get 40 handle trades. You can still be very profitable taking small scalp trades, okay? But yeah, guys, that is gonna be it for this week's video, okay? Let me know in the comments if you lot enjoyed this one. If you have, please leave a like, comment, share, and subscribe, all the good stuff. But yeah, guys, just to end the video off here, okay, if you are someone that's serious about getting your trading to the next level and you're looking for that mentor where you can learn his exact thought process, okay, you can see the executions on live stream every single day, guys, come and watch me trade live at 9:30 AM New York time. All the links will be left in the description below, okay? It's a Telegram chat, and if for whatever reason you can't tune into the live streams, the signals are also sent into the chat. So let's say you're at work, for example, you can just have a look at your phone, see the signal get sent into the chat, and simply take that trade, okay? But the most value and benefit that you're gonna get from the live trading group is actually tuning in to live streams, okay? Every single day, there's a link sent into the chat where we go live on Zoom. So a ton of value is getting dropped inside those streams every single morning. So if you are interested, make sure to go check that out. But other than that, guys, I will see you lot in the next one. Take it easy.